Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as was the vast majority of crypto and finance. And with that being said, I hope that you are all having a beautiful day or a beautiful night wherever you guys are out there in the world. Going back to July of 2023, I put out a post on X and I said, I don't think we are right. I know we are right about being in this space. For the first time in history, the retail sector has a chance to be invested before the big bankers and Wall Street gets their hands on it. Do you know how incredible that is? Now, for those out there that are going to say, but JPMorgan has been in this space forever. Yes, a lot of these big players have been around for a bit of time, and they've had their hand in the pot around things like Ethereum, for an example, since day one. But have they been invested in it? Could they offer their services to retail? No, they couldn't. All they were running is private blockchain technology. But what happens when they start offering buying and selling crypto within the JPMorgan app or the Bank of America app? That's when things start to change greatly. But they can't do that yet because of regulations, because of a lot of standardization that needs to put in place. Once we start to see that happen, we're no longer early and we're no longer front running the big bankers and Wall Street giants. Now, why am I bringing this back up? Well, because I seen a post by Smoked Dog, which, by the way, this is SMQKE. And we have cryptocurrency investing is turning into an institutional investor class. First time in history that retail investors had access to an asset before institutions. And look at this. Specific observations from selected practice areas, capital markets. Adoption of digital assets as an institutional asset class. Cryptocurrency investing is developing into an institutional asset class, but that process has had fits and starts. Down here, we actually have rapid creative destruction. As is evident in this paper, digital asset investing is not limited to investing in just the major coins, and it's certainly not limited to regular long-only investing. Innovation in coins and other assets is happening at a rapid pace. And there is a high degree of activity in activities such as tokenization, lending, borrowing, and staking. And with those activities come experimentation and success/failure, causing the sector to evolve very quickly with large amounts of capital at stake. But we already know that for the first time, the retail sector in history actually was able to have one foot through the door while they had to wait. Because again, there's a lot of things that had to be put in place in order for them to be able to step through that door. This is big. Now, on top of this, there was two posts by Smoke that I also saw, which was this one. Cryptocurrencies is already being viewed as the top 3 biggest investment opportunities by institutional investors. And check this out. So this is the list, right? Number 1 is private equity. Number 2 is US equities. And then number 3 is cryptocurrencies. Now, think about how crazy that is when you look at the value behind some of these asset classes. Hell, look at real estate. Real estate is right below foreign exchange. By the way, the foreign exchange market is settling $7.5 trillion per day. Real estate, a global market, an asset class that is worth $300 trillion plus. Think about how wild that is. And cryptocurrencies is the top 3. Listen closely to this.
The majority of them predict that cryptocurrencies will be one of the top 3 performing asset classes that they can offer to themselves and to their clients. This is pretty important. A few years back, most of them would not even have deigned to put cryptocurrency on their list. Today, 41% voted as one of the highest performing asset classes. The majority of them.
I'm interrupting this video just to let you guys know that DCENT Wallet is holding a giveaway of 24 XRP right now for anyone that does purchase a DCENT Wallet through my links down in the description below, as well as in the comments below. But also, you can enter to win 2,024 XRP as well. You can only do this from February 8th through February 25th. The winner will be announced on March 11th on DCENT Wallet's account on X. So if you want to go follow them, turn on notifications. you want to go and fill out this form on their website, all you have to do is go to store.decentwallet.com and click the top section here where it says wishing for a radiant 2024 with XRP. It will take you to this page specifically, and there's a form on the second part down here that you just have to fill out. And like I said, on March 11th, they will be announcing the winner, and you will also get your 24 XRP from purchasing a Decent Wallet through my link right now, and you could save $89 off the double package and $20 off of the single package, and you can get your 24 XRP for free practically by purchasing a Decent Wallet, and you can get that on March 6th. So if you guys do want to go check that out, links down in the description below as well as in the comments below. And with that being said, let's just jump back on into the video. Now, with that in mind, I also put out a post and I said, very interesting. Looks like JPMorgan is pushing the FUD campaign again. From every report I have read, institutions are ready to dive deep into crypto. And from that video that you just heard, it seems as though they are ready to dive deep into crypto. And here we have another post from Smoke. He's actually responding to my post, and it says, JPMorgan is actually the most involved major bank in blockchain, but they don't want you to know about that. And here we could actually have, or here we have on this post, we have crypto trading in custody, private crypto funds, crypto ETFs, crypto-enabled payments, and tokenization. If you actually look at the top major banks, you have Bank of America, for an example, and we can see which ones they are involved in and which ones they are not involved in. If we look at JPMorgan, they're involved on every single damn front. Think about how crazy that is. But listen closely.
That is a page that you should look quite closely at because the Americans are not being completely left behind. The crypto trading and custody access is now being provided by most of the US's largest players. There are holdouts, such as Citibank, but most of them now have some sort of offering. And once they have that, they tend to move on to private crypto funds and private funds like our own, as well as the crypto ETFs like Bitcoin ETF that was just approved. It takes them a while to get their heads around tokenization. What I'd also want to call out on this page is about halfway down, you can see JPMorgan Chase. And it's ironic, we think, that JPMorgan Chase has actually gone the furthest in offering blockchain-based and crypto-based products to its own clients, despite the fact that its CEO is very visible in raising issues. Just why there's a disconnect between what the CEO says and what JPMorgan Chase is actually doing is for someone else to explain. But we're very impressed by the progress of JPMorgan, which is actually also sitting under and helping trade this new wave of Bitcoin ETFs.
So there you guys have it. And again, you know, a lot of these big players, they don't want you to know that they are involved. They are waiting until they fully launch to the retail sector before anyone even realizes it. That way, the next flood of investors and the next flood of capital come in just to push things even higher. Now, that's not going to happen for some time, but they're already prepared. Now, with all of this, where does XRP stand? Where does Ripple stand? Because if we go back in time, 2 months ago, check this out. XRP price surges amidst talk of crypto adoption and partnerships. If we scroll down, we can actually see XRP's recent price surge highlights its potential for broader adoption and its growing list of 500 plus global partnerships. And if you did miss it, yes, this was actually a full-on discussion from Ripple themselves. And they've already had over 500 partnerships globally that could very well be key players around on-demand liquidity, which is very significant. But we have Ripple CEO Brad Garlinghouse claims XRP is 1,000 times faster and cheaper, revolutionizing payments efficiency. Interoperability emerges as a crucial factor in unlocking the full potential of blockchain technology and XRP's utility. At the end of the day, right, these 500 organizations, they could be institutions, they could be big banks. We don't know who they are, but a lot of them we have a name to. For an example, we have Neum. I mean, the list is substantial when we look back in time to like 2019, where there was 38 of the top 100 banks already on par. Bank of America, PNC, there's a lot of big players. But since 2019, a lot has changed. And it's grown to even more and more players globally, and also central banks. Remember, they've been in discussions with 20 to 30 central banks. So these 500 plus, we don't know all the names. We know a substantial amount of names, but imagine the ones that are in NDAs behind the scenes. But the reason why I bring all of this up, right, is because when we look back in time to just this post recently from Ripple, we know that 70% of global finance leaders say their confidence in crypto and blockchain industry increased in 2023. which means in 2024, they're going to continue to tap into the space. And 76% of them are already interested in blockchain as a means of driving innovation in their business in the next 3 years, which is also a big highlight that institutional grade adoption is only going to continue on from here on out. And a crucial piece of the puzzle to focus on with that is also Metaco. Back in December, Credit Suisse launches a crypto trading venue targeting banks and securities firms as clients. And this is actually on Metaco. Also, BBVA. This is allowing BBVA Switzerland to embark on a new stage in its crypto strategy, characterized by the highest standards in security and operational agility. This was also a big one because guess what? This was all targeting tokenization of assets to meet the needs of its private banking customers and institutional clients. Beyond this, we also got this one with Zodiac Custody. And this is also with Standard Chartered, Northern Trust, and even SBI. We announced today the expansion of our long-standing strategic partnership with Zodiac Custody, the leading digital asset custodian backed by Standard Chartered, Northern Trust, and even SBI. Part of their commitment is to deliver on their ambitions. They are providing custody for institutional demand at global scale. And this is something to also watch for, considering the fact that when we really look at what's going on, institutional grade focus and adoptions here. And it's already through an acquired company that Ripple acquired. Also over here, HSBC announced that it's working with Metaco as it plans to launch a new digital assets custody service for institutional clients who invest in tokenized securities. And again, tokenization is the focus here with securities. Why is securities a big focus? Go look at the DTCC. They acquired a blockchain-based company, Securrency. They are settling $2.5 quadrillion worth of securities per year. Think about how massive this market is. And also, for all of those out there that are kind of confused on how Metaco and Ripple work together, David Schwartz already said that they're still forming this alliance between Metaco and Ripple, but we can already kind of piece together the puzzle pieces and say, all right, well, you have Metaco, that is this infrastructure layer for custody services, and then you have HSBC and all of these big players building upon that foundation. They're building out these solutions, but guess what? You still need liquidity for tokenized markets. The tokenized market's not going to make itself. You need somebody that's making that market. Where does that come from? Where does all the liquidity provision come from? Oh yeah, that's right. The XRP ledger has an amendment right now that David Schwartz also said they already fixed the code. AMM. Guess what? There goes liquidity pools. There becomes a massive amount of liquidity pools that's increasing liquidity, that's providing liquidity, and also providing a market for tokenized securities, tokenized anything. That's where the secret sauce is. That's where the full-on puzzle becomes clear, in my opinion. But also over here, we have custody as the enabler. Custody is the necessary brick so that as a regulated institution, you can build on top of it and create a service that your clients will appreciate. This is from Adrian Trissani, the CEO and founder of Metaco.
But custody is the enabler. With custody, can you then get into value-added services? With custody, can you then go into payments, tokenization, and other streams? And custody, therefore, is this necessary brick, this thing that you have to throw on the table, so that then, as a regulated institution, can you build on top of it and create a service that your clients will appreciate?
So, at the end of the day, this is the significant building block on the foundation that's going to usher in all of the institutions to tap into these solutions and also even build their very own tokenization solutions on top of this infrastructure layer. But like I said, the secret sauce is liquidity and also making the market. That's where, like I said, XRP comes into play. That's where Ripple comes into play. This is crucial to note. And again, is that going to be the 100% destined thing to happen where XRP is making the market through AMM and things like that? Not exactly, but I do think that from a speculative point of view and from what everything I've read, I personally think that that is the clearest picture. But maybe I'm wrong, right? But that's me thinking out loud And that's what makes the most amount of sense. I still believe that XRP is going to be a crucial player here. The XRP ledger. Listen, you don't have David Schwartz going around pioneering talks about the XRP ledger and how it was specifically designed for a tokenized economy and how it's the best in class technology to really complement a tokenized economy, all for nothing. At the same exact time that Metaco, which is an acquired company from Ripple, is expanding rapidly with institutional grade focus, and it's all around tokenized securities and tokenization initiatives. It's not a coincidence, in my opinion. I don't believe in coincidences. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. This has been Nick. Thanks for watching. Peace out.